Good morning. Now that we've been through a couple of chapters, I want to do a brief video review of some of the basics of accounting, which I hope at this point you've picked up. But if you're still struggling with a little bit, maybe this video session can help you out. One of the most important things we have to talk about in accounting is the accounting equation. The accounting equation says assets are equal to liabilities plus owner's equity. Now, there's a lot of things we need to know about this equation. First of all, the equation's an algebra equation, so you can manipulate it. We can have assets minus liabilities equals owner's equity. We could have assets minus owner's equity equal liabilities. Also, the equation has to balance. The total of your assets on the left side has got to equal the total of your liabilities and owner's equity on the right side. So that equation's got to balance. If you have $20 worth of liabilities and you have $30 of owner's equity, then we know we have to have $50 worth of assets. Let's talk about each one of these pieces just for a minute. Assets are owned resources of the business. Assets can be things like cash, equipment and materials, those sorts of items that we own that belong to the business. Liabilities, those are debts or obligations of the business. In most cases, those are amounts we owe. Maybe accounts payable that we owe on credit for supplies we purchased. Or perhaps some long-term debt, like a mortgage on our real estate. Owner's equity is really just the difference between the two. You can think of it as a measure of the owner's interest in the business. You can think of it as the residual interest in the business. It's assets minus liabilities will give you owner's equity. Another way to think of it is if we decided to close the business today and used all the assets to satisfy the liabilities, any assets left would be what goes to the owners. That's owner's equity. So this is the accounting equation. You've got to understand how it works, and most importantly, that it always has to balance. Now, the next thing I want to talk about are debits and credits. And debits and credits can be a tricky concept for students, but there's really not that much to them. And once you get your head around them, you're going to do all right. Now, all debit means is left side. The debit side is the left side. And all credit means is right side. The right side is the credit side. If we look at our very simple T account here, the T account has a left side, or a debit side, and a right side, or a credit side. Very simple. Debit means left side, credit means right side. Don't try to make it into something it's not. Now, I want to talk about a couple of pieces with you. It's important that we think about different accounts and their normal balances. All the normal balance means is what side, debit or credit, do they increase on? Assets. Assets increase on the debit side. When we receive cash, we debit cash. When we pay cash out, when cash is going down, it gets credited. Assets increase on the debit side. Also, expenses. Those costs of doing business, those increase on the debit side. When we pay the power bill, we pay our phone bill, when we pay our employees, we debit accounts like salary expense, wage expense, utilities expense, telephone expense, because assets and expenses increase on the debit side. The opposite's also true then. Assets and expenses decrease on the credit side. When we pay that phone bill, we debit the expense, telephone expense, and we credit cash. Because we pay cash, cash is going down, it decreases with the credit. Now, on the credit side, liabilities increase on the credit side. When we borrow money, we debit cash. Cash is an asset. Cash is increasing when we get that new money in. We now have an obligation, a liability to pay it back, so we're going to credit the liability because it increases on the credit side. Equity, that capital account, is going to increase on the credit side. When we have income, that will increase. Also, revenue. When we get cash from customers, we debit cash because the asset cash went up. Got to have a credit. That credit is to revenue because revenue increases on the credit side. So along with that accounting equation, these normal balances are something you really need to learn. Assets and expenses increase on the debit side, the left side. Liabilities, equity, and revenue, they increase on the right side, the credit side. Now, this is a T account. And a T account is nice for showing what a particular account did. So let's look at something like cash. Pretty straightforward. Let's say we receive $100 in cash from a customer. That's a debit. Cash is increasing $100. Then we pay a $20 bill. Well, cash is going down. So the cash account gets credited. The balance in the cash account is now $80. It's a debit balance because the debit side is more than the credit side. It's also a debit balance because cash has a normal debit balance. In normal situations, cash will have a debit balance. The T account is a nice way to show one particular account. But we've also talked about recording transactions. And we record transactions with journal entries. With the journal entry, we're going to record our debit and the amount, and then we're going to indent and record our credit. So, let's say on, January 1st, we received cash from a customer. In that case, we're going to debit cash. Cash increases on the debit side for the $100. And we did this by providing a service or selling a product or whatever we're in business to do. So we're going to credit revenue. Because revenue is also increasing. Revenue increases on the credit side, $100. Debit goes first. Credit goes second. The credit is note indented. Same thing here. The credit is indented. That way we know which account was debited and which account was credited. Also, there's $100 on the debit side. There's also $100 on the credit side. You can have more than one debit, more than one credit, but you have to have at least one of each, and they have to balance. So those are some basics on debits and credits and the accounting equation. I hope those will help you along as we continue to move through the course.